Good morning, everyone. I wanted to make this video just to give you a brief update on the algo that I've been building and on the status of the strategies that I'll be putting live with live in the market. That is to come pretty soon. So I just wanted to give an update on that and also talk about the new feature that I've implemented on the algo. So as I've showed before, the goal of this algo is to search for strategies that we can use in the live market. So for example, if you wanted to test, let me put here the B Pro. If you wanted to test a mean reversion system, for example, on the 15-minute chart or 30-minute chart, and you wanted to see how, okay, I want to short Bitcoin every time that there is a deviation of, let's say, 3 ATR from the baseline of or from the 20 bar moving average, and we want to short there, and we want to cover when we have made at least 1.5 or 2 times the initial risk that we had. So if you had to test that on a 30-minute chart, it would be very time consuming. It would be very, you would be exposed to mistakes, to not taking all the trades that you should. And yeah, that is very inefficient. Even though there is its benefits, like I've mentioned in the previous video, you can look through a chart and get new patterns, new ideas to put into a system. You also need to work with efficiency. So this is why I've built this algo to search for systems. So the algo right now is pretty simple. I've been building the structure first, and I have just a few indicators here. I'm gonna go through them. So we have here a simple moving average with these possibilities. So a 5 simple moving average, a 20, a 50, 100, and 200 moving average. So this is the possibilities. We have an RSI. I've also coded the RSI. We also have a Bollinger Bands, and we have this the BPRO current time frame trailer, both for entries and for exits. One of the ideas of this is that I didn't define what is an entry or what is an exit. I want the algo to decide that for itself, because if I'm putting that, let's say I'm giving it I'm saying that price being below the 20 bar moving average, that means that that should be an exit. For example, use that criteria, price below 20 bar moving average, as a criteria for specifically an exit. I don't believe that if we want to make a truly automated algo, I don't want to put too much bias into it. I want it to find for itself the strategy, and not put my bias on what is bearish or what is bullish in it, if that makes sense. I want the algo to come up with its own system, and not putting my bias. Now, I can give I gave it the bias of trend following, of mean reversion. I put it some rules, but that's more trading related rules. The philosophy behind trading. It's not specific to an indicator. So we have the current time frame trailer here. We have the ATR. The ATR I use for the initial stop. I want the initial stop to be, for example, you open a position at the open price and you get an ATR, let's say open position, let's say you are short, you get an initial stop one ATR above your open, or 2 ATRs above your open. So let's say the ATR is $1 and you are getting in a position at $5. So you get in at $5 and the ATR is $1, so your stop is $6 for a short position. And the take profit, I've added this criteria that I didn't have before, the take profit. So now if we are searching for a mean reversion system, I also can make it look for a take profit, because a mean reversion, the concept of a mean reversion is that you are longing or shorting certain price movements that are extended from its mean, whatever you consider a mean. And for that, usually a mean reversion system is systems that have a lower win to loss ratio, but have higher win rates. Um, Compared to trend following, that trend following is more of my field, but trend following is less win rate and way more average win to loss ratio. So it's a give and take, and this is good for diversification across systems, because if you have one or two systems running, they are basically the same. They are trend following, for example. They will be correlated in terms of bad periods and good periods. So it is good to have different systems, different approaches for different type of regimes in the market. Okay, so let's run a quick example here. For example, we want, let's change the ticker. Let's go for Ethereum USDT. Okay, we want a 30-minute time frame. We want for this video to be quick. We want just 100 days. Let's get the past 3 months and something. We get 100 days. We'll get a short short trading system, and we get a mean reversion. We'll just run 100 iterations here. We will get a maximum criteria of 3. I don't want more than 3 indicators per entry or per exit. I also chosen the initial position size to be $100,000 and the risk per trade 1.5%, meaning for every trade you take $1,500 in risk. Okay, so let's run this. Now it is running, it is making the calculations. It usually takes a bit, not too much. Here we are using just 100 days and 100 iterations, so it doesn't take much long, but it always takes a bit because to calculate the indicators, especially the B Pro, I had to use a lot of for loops, and if you know Python, you understand that for loops take a bit of efficiency out of the code. That's why you have to be also but since the calculation of the indicator is outside of the searching for strategies, it doesn't matter. But when you are running, let's say 100,000 iterations, and that I do, you have to be very careful about efficiency, because a 1 minute backtest plus 100,000 times will take you 100,000 minutes. So efficiency becomes a big problem once you start running iterations, and that's why it took me also a lot longer, because I had to be concerned not only about the strategy but also about the efficiency of the code. Okay, so now we got here backtest, but this is not what I'm looking for. We want I have this data frame, this table, where it tells me all the strategies that performed. We didn't get many strategies that performed well. We just got 2 strategies, and we got here with 6 trades. It's not very statistically relevant, but let's get it. Okay, which shows that the strategy number 20. Let's say how does it look like. So the strategy number 20 looks like this. Doesn't look good. The system didn't find anything with this specific criteria, didn't find anything valuable. Let's try to go for longs. Let's try to go here for a long trading system. And now the next focus will be at adding a lot more criteria, because if you notice, this criteria is Bollinger Bands, it's RSI, it's moving average is more for trend following, and B Pro is a lot trend following type of indicator because it's about breakouts. So now I want to add a lot more criteria focused on mean reversion as well, like deviations. Yeah, it will be deviations. I want deviations from upper bands of indicators, a bunch of that type of criteria to also help with finding mean reversion systems. Now it's just calculating here. You see this running, this is the 100 iterations that we chosen here. It is running 100 iterations of the code. So it is taking these criteria, all these criteria, putting it together and running hundreds combinations of it. And it's a bit more complicated than that, but it's basically that. So, and as you can see, we didn't find any mean reversion system that worked only in the past 100 days with the 100 iterations. Let's go for a trend following system. Let me just change here the time frame for 1 hour, and let's keep going with the mean reversion. Let's choose 365 days and go for a mean reversion in the same way. A short, yeah. Because we are giving it a very small sample size, and it is hard for it to find a system that actually for this I have to explain. For example, I don't know if you are familiar with the concept of in-sample and out-of-sample data. In-sample data is basically what I use to train the algorithm, for the algorithm to look for the strategies. Is the data that the algo is allowed to look at. And I usually define that for 40%. So, for example, you don't want to be testing a system on all the data available, because you will have the tendency of over optimization for that period. If you will, what is over optimization? In a quick way, over optimization is when you take a data set and you optimize the indicators to fit perfectly for that data set, so that you get the best trading system for that specific data that you have. The problem with this is that the markets always change. The markets are changing all the time, the dynamics, everything. And when you do over optimization for a certain data, you will probably not get that to work in the live performance, because it is so optimized for that specific data set. And when you take that when you take that system, it won't work outside. So what you do is you divide your system, let's say 50-50. You get only half of the data, where you build a strategy on that half of the data. If you are happy with that backtest, then you take that system and you apply it on the data that you have not seen, the other half of the data. If the system works on that other half of the data, you have something that is robust, that should be robust, because if it worked on half of the data and worked on the other half that you have not seen yet, it means that you have a true signal. At least it should mean. Depends on sample size, of course, depends on a lot of criteria, but in theory it means that you have not over optimized, that you find some signal. Okay. And the problem when you give it like 100 days, like we were doing before, is that you are giving it very little criteria, very little data for it to train something reliable. So now that the system has ran, let's see. Okay, now we found a lot more systems that actually worked. 106 in the 116 trades. Okay, let's get it. So we change here for the starter 32 that we chosen, and let's see how. So this is the strategy number 32. It's just for the past year. The chart is still printing. It is on the hourly time frame with 100 trades. You can see, so we can barely see anything because it's a lot of trading happening. But basically, you have here a drawdown, then you return. You have 53% win rate. We have a total return of 10%. With a maximum drawdown of 12% on this period. It's not very statistically relevant. 300 days. How many days we used here? We used 365 days. It's not very statistically relevant, but you can see that it found a profitable system, shorting the market on the hourly time frame. Okay. We can see here let's take a look. We can see here the trading, and let's see the last trade. So the last trade was on the 13 of May. On the 13, let's take all the indicators out. Sorry, so you can see better. 13 of May on the hourly time frame. 13 of May at 6 p.m. Okay. So we shorted here, and we left on the 26th at 8 a.m. So basically here. So we got in at this price and we left at this price, the last trade. The market has been ranging, so it's nothing relevant. That's why you can see here that it was this trade here. It's nothing very relevant. Okay. And this is it. This is the algo that I've been building to search for systems and for search for trading systems in an automated way. And it is coming together. The next step will be launching a live system, and I'll be sharing the performance of that pretty soon. Okay. I hope you like it. Thank you very much.